All right, welcome back. Another episode of Chart Talk. Market has been on quite the run up the last couple of weeks here. Again, we had this correction, then we had this insane rally to new all-time highs. And what we've seen in this insane rally is we have seen two little consolidations. Again, in the Qs, it's not as obvious because it was just more vertical climb, but we did have a little mini flag here for the next breakout, and we have another flag forming again. So I have these arrows drawn here where, you know, push through these all-time highs, the path continues higher. And if we do push down through support, we more likely should expect prior resistance, this prior flag to act as support, and then we get the eventual climb back to high. So it's a little bit more obvious when we look at the S&P. Again, you can see this first flag that formed here, 700 acted as support, where 715 was resistance. This was that first bull flag breakout after new all-time highs. And then we have the start of this second flag where we want to look to add through the 750 all-time highs. But in the short term, we more likely need to see a little bit of a shakeout because we've had, 30 plus days of higher price action and, 2 weeks of new all-time highs, after each fall, after each day pretty much, that we do need some little pullback. This isn't, these arrows like visually where I'm expecting the market to go. It's not like, okay, we're going to break 725 and we're going to be back at the 630 lows. I don't think that's going to be the case. Market has been very strong. And, every trend line you can draw is just pointing to higher price action. So, even the EMAs, will start to act as support in these areas, but we do need to let the market breathe. Can't just expect the market to go up every single day. It moves in waves. It moves up a couple of days, pull it back in, and that's just normal, healthy price action. So again, market still looks great. You should expect some minor weakness over the next couple of days just as the market kind of pulls back in. But again, a lot of strength still out there. Again, Dow 30 names, been flagging out here. Again, talk about these flags in the S&P. Nice consolidation here, really just gearing up for this, chip shot of a retest of this prior all-time highs. And then eventually we'll see, the Dow 30 play catch up like the Qs and S&P have already done. Again, rates have been breaking out like crazy. But moving on to some of the sectors, again, energy has been quite strong. Had that, this is kind of what we can expect, similar to the market. Energy sector went on this insane rally for months, tops out, gets extended and has to start to, pull in and flag out. It doesn't have to, dramatically crash, but it needs to pull in and start to flag out. And that's exactly what energy did over the past couple of months. So, it's climbing back to this retest area. We have a couple numbers in this Exxon that's been doing very well. And again, name like Exxon is like just, keep raising that stop as it continues to work its way back to these par all-time highs. And again, it's moving in lockstep with the sector itself. So this is just, some expectations, similar expectations of what we can see from the market, where it's not this, amazing rally and then this pull in, continues back to, the lows. It's just that needs to settle in, chop around, set the base and flag out. And eventually you get a push high. Again, for this retest here, we would look to take profits at this major retest because this is the first retest of this high. And this area typically acts as resistance because anyone that was buying into this rally and got stuck into this is the time where they can get out and kind of save face. Like, oh, I sold it at the highest the intersector ever traded at. And that just creates resistance. And that's why we look to sell into that because we know the third or fourth attempt is when it's really going to go over here. So if we can take this run up and let it settle out, we can wait for the eventual buy down the road. So again, what's really been setting this market on fire has been the semiconductor sector. Yeah, they're up nearly, this is 70% move, 60% move in a month's time. So, insane price action out of this space again. Insanely technical breakout last summer. And then we have the parabolic run up the start of this spring. So a lot of these semiconductor names have been gone on insane runs, but when you have a stock going up 100% a month, or the sector as a whole increasing by 50 to 60%, then you have to expect some profit taking that we're talking about in the newsletter. This weekly candle was kind of a decision maker. If we had inside weekend up, that the semi rally continues, and if it's inside weekend down, then expect profit taking, expect some weaker price action. And so far to start the week, we're getting an inside weekend down price action, which would be again, not expecting a dramatic crash, but you have to expect some kind of fade, at least 50% retracement, and then you have a huge flag that starts to form in this like 100-point range here. So if you're in these semi names, we'll go over some of the most notable ones in a moment. Definitely want to be looking to ring the register or raising stops. This isn't really the time to be chasing them after this insane run. And again, semis and tech kind of running in lockstep, just not as aggressive of a percentage gain in the tech sector, but still holding up, inside week so far, the tech sector. And a lot of other sectors, we have some flags, telecom name with this broad megaphone pattern, and we have this weekly bull flag forming in telecom name. So again, telecom looks pretty good here. Nice flag. Materials still trading textbook in this, silver pattern pulling into support. Expect a little shakeout here, that eventual climb, back towards highs. So, not trying to catch any bottoms here, but just textbook, trading within its ranges. Again, we talked about the retest area, like we talked about before with the energy sector, getting back up to that retest area is where it typically acts as resistance. So for the industrials, this was the prior all-time high. This area, it retests it, acts as resistance, starts to pull back in, and that's something that we can, expect from the energy sector. It gets back up to highs, it tests it, pulls back in, and then sets back up. And this is just textbook price action. Again, biotech still flagging out here at this all-time high, major breakout, but again, just not ready yet. This, breakout's going back a couple of years, so it's just it's on pause at the moment. And then just some weakness. Again, it's good to see weakness in utilities. We want to see weak utilities, so people are focusing on the more risk-on sectors. Consumer discretionaries, broke down through support. Again, it was flagging out nicely over the past couple of weeks, so I test support down here, so kind of on the avoid list. And healthcare has been starting to base out here, but we continue to see lower highs. So healthcare can push back up to these areas and form new higher highs. Good sign, but so far, healthcare for the most part has been unavoidable. So again, let's look at some of these semiconductor names, because they've gone on the craziest rally that we've seen in these names for a while. So again, this MU, up way more than 100%. Where this was at just, in April was at 300. This is again why when you buy names through highs, you can get rewarded. This name looked like this was the topping pattern, and if you focus on just buying names through new all-time highs, you start to get in here, and wherever you saw this move, you get rewarded. And this is why our focus tends to always be trying to buy names as they break new all-time highs. So again, insane run again, nearly vertical at the end of this rally. And this is where this, kind of fade comes back into play. There's really no, 20-day EMA is getting pretty close for MU, but when you get these, nearly vertical moves, once that aggressive trend line breaks, you do get that very equally sharp rise up. You get the same, kind of pullback on the way back down. So definitely not want to be stepping in front of the trend. And then now, if you were in it at any point already, and you have a price, under 500, you're sitting good. But to start trying to get into it now, you have a lot more risk to the downside of any of these little shakeouts, with much lower price action in the cards than a break above 800 in the short term. We saw the same thing with this Intel. Even for myself, I was in this Intel for, a couple of, it's been about a year or two, buying down to this base. And, when Intel gets back to dot-com bubble highs, up 200-300% on some of these buys from a year or two ago, looks like a great time to sell. And boy, did I sell it one earnings report too soon. But again, it is what it is. For any of those that held on to Intel after that earnings phenomenal move, again, 100% higher in a couple of weeks. And now, it's going to be a wide range here. It's a 70-point range. So, this is just why you need to be, taking off stock on the way up. Skyworks definitely lagging in this semiconductor rally. Still kind of setting up through the 72, but when all these names have gone up 100%, 150%, 80%, and SWKS is kind of hanging out down here, kind of bottom right of the chart. Yes, it can still break this area. Yes, it can still probably push higher. Probably goes to this 90 area, but if everyone else at the party is doing this, and this name is hanging out down here, probably no point. Let's see. NVIDIA does have earnings tomorrow, which is going to be interesting for the name. Even for them, kind of, the odd lot in semi names where, all these names are going on insane runs. And yes, NVIDIA has definitely gone on quite the run. But for the most part, it's still, kind of within, the broader flag that it was forming. It didn't really have this, this is just kind of the range that NVIDIA's traded in all year. And this is kind of really the only part of the breakout that really got, again, while other names, they look at names MU, this is where MU took out its all-time high, runs up nearly 100%. And then you have a name like NVIDIA, where it just takes out its all-time high, and inconsequential move relative to other names. So just something interesting to keep an eye on for tomorrow. Is this the start of an insane rally to 400 NVIDIA, or is this becoming the Apple or the Amazon post multiple splits where it just gets too thick of a name to kind of really get going? This ASML has been setting up, wasn't ready just yet. Needs a little bit of time there. But again, we're seeing kind of the overall theme here where a lot of these semi names we're looking at already topped out and have pulled back in. None of them have put in really new highs. Even this AMD, insane, shots to Nico for holding on to this thing. But amazing breakout, the all-time highs, insane run up. Talking again, it's nearly 100% in a month, and it has since pulled back 70 points and is starting to test, the gap into that. So we're not really seeing any of these semis putting in any new highs. It seems like we've seen, the temporary short-term high in this sector. Again, QCOM, this is a bear market move in a week. 250 to 190 to 20% pullback off the highs. And again, this is basically we had to draw a trend line, as close to vertical as you can get. So Not to say that this, semis are gonna crash, they're gonna go to zero, but the easy move has occurred, and now it's the chop. Now it's you know putting in lower lows, putting in lower highs, chopping around and causing like mass frustration because people want this move if they missed it. So semis, just have to be aware of that. Again, a lot of the energy names have been doing quite well. We're seeing some nice price action out of those where they're not, they've already, they had their little top out phase, they pulled in, and we're starting to see, some of them start to wake back up. But let's move on to some names we're keeping a closer eye on. So again, this arm, nice little pennant flag, forming out here. Again, the broader breakout really is going to be to that, 240. But if you're a little bit more of a short term, like tactical trader, definitely can find an entry, through these like 228, 229 highs, and then you have that add to 240. Again, this arm is probably one of the best like recent IPO charts you have. It breaks up the IPO high back in 2024, and then it starts to take out this all-time high more recently and just forming a massive, tight flag up here. Of all the semi names, in my opinion, this is like probably the best chart out there. Just given what it's, newer issue, it's taking out those highs, taking out the macro highs, and setting up again to take out those that 240. Even if you look at like Cisco, which again, this is like a 20-year setup versus ARM's 1 or 2 year, but Cisco couldn't take out 80, couldn't take out that 80, and once it does and clears it, really gets going. Same with like Intel, a lot of these like .com bubble names. And again, even for me selling it at 68, 69, I was in this name from the mid 20s, and it gets back up to a level pre the insane semiconductor rally. Gets back up to a 30-year level. This Cisco hasn't traded above $70 a share since before I was born. Ringing the register right here at the moment felt great. What a much lower cost basis. But again, it's like my own lesson on when these names get back to these highs, you need to give them more time. And that was my blunder of giving this thing away before the next 100% move that came in the next month. So again, this ARM, in my opinion, best semiconductor chart. Everything about it technically looks great. Again, I think really just waiting for 240 is probably going to make life much easier than sneaking into it a little bit sooner. But this is one looks phenomenal. This Jazz pushing through an all-time high today. We've had a bunch of flags that are buying in this Jazz throughout the past year, through that 180, through that 190, through these highs. Like they're just flag after flag in this Jazz, and again for now, stop below this 220. If you're still in it, don't let it rock. CYTK, hopefully Kevin's still in this one, still flagging out. Just need some time for 80, looks great. Again, this Costco, we had alert it down here at around 1,000, breaking out nicely, 10% higher, looks great. We had this alert in Allstate Insurance to this 216. Again, we're talking about trying to buy these names through all-time highs. Allstate couldn't break all-time highs for 2 years. We want to get involved once it's able to start breaking those highs. NTNES base breakout set up to this 120. Needs a little bit of time here. Does have earnings coming up? Could be a little potential opening range breakout to 120. You guys like Louis Vuitton? Very textbook base forming down here. Key support at 520. Going back, about a year from now, looking at that entry at 560. It is an ADR, so just be aware of that. But it does push that base in a very tight risk. Mondelez, not ready just yet, failed to break out, but textbook earnings flags forming here, failed today, let it pull back in, give it a week or so, and that next attempt, their 62 should be ready to push a little bit higher. Again, Twilio, nice earnings flag. Again, name's got on like a bit of a crazy run back to earnings. But again, we just want to buy that 2 or 3 areas. So just like Mondelez, give it a couple weeks and be gearing up for that breakout. Just ASML, we need semis to kind of come back. This Lin, 511, 517, both areas to keep an eye out for this blue sky breakout versus 490 for now. Again, you can see multiple attempts, retest, third, fourth, fifth attempt here. If you want to keep an eye on that, again, the more times it gets back to these levels, the more likely it is to push higher. SMCI, again, fading, the gap it had. Again, big base break through this 36. Whenever it gets back up there, we're going to want to be involved. This Meta, again, keeping a close eye on this 620, 624 area. When we talk about the 4 stages, again, from end of the year until April, Tesla was in a very clear breakdown stage. We talk about the 4 stages again. A lot of times they can overlap, so you have a little bit of a mini base that formed in this area, and now we have the stage 2 breakout stage, and Tesla's just kind of trading within this channel. So it's like anytime it gets up to here, you want to be selling it. Anytime it gets into here, you want to be looking for those buybacks on the way back up. You don't want to be trying to buy this little red candle here. You want to be trying to buy this low. You want that low to get put in and then buy on the way back up. So you want to be looking for the entries here on the way back up after the low gets put in. And same thing with this, recent pullback. You want to be buying up through this high day versus that low. And that's where you can have, very tight risk if this trend is going to continue. So that's you buy through the high. With a stop below here, same thing here. You buy through the high with the stop below there. So you're letting the Nikkei pull into that breakout channel, settle out. You have to be the hero, catch the bottom, and you can add to it, back and back up, and you can just trade this range. Morgan Stanley, my prior employer, still looks great. There's 195. Those going to break out to all-time highs. Wasn't ready on Monday. Again, a lot of these names, like we're talking about, this broader minor weakness in the market. This is not a big deal. Let it pull in a couple of days, let it base back out, let it turn back up through those highs, and we're ready then. KALU, again, testing support. Again, really just more focused on buying it through this all-time high. Lastly, we got this Oclo up to 80. So again, we're seeing some extremely minor weakness in the market. Again, super insane. This is 2 years worth of returns in a month. So if we got to get a couple of these pullback, let it happen. It's not going to be the end of the world. Everything still points to much higher price action on the road. It just can't happen day after day. The market does need to settle out, be annoying, and be frustrating. And we sat through, 6 months of a market that looked like it was rolling over to, lower lows, and we got a crazy route. So let the market pull back in, let it settle out. Try not to be chasing names unless chasing semiconductor names unless it's a defined setup. Yeah, this ARM is probably the best semiconductor chart out there, just from a technical standpoint. So hopefully this recap shed some light on a couple things. If you have any questions, post them in the comments below, and we'll see you next week.